Welcome back to another video. You're watching the Wolf of London. Now we're going to be looking at the daily reverse repo update. Now this user PC Tracer for the last 2 months or so has been posting on Superstonk, on GME, on now GME Jungle, daily reverse repo updates, as I say, daily, literally without fail. So as you can see, the deal date, Wednesday, July 28th, which is today. Delivery date, Wednesday, July 28th. Maturity date will be tomorrow, Thursday. Type of operation, reverse repo. Auction method fix, settlement day, same date. That information doesn't really change, just the date. Now, the things that does change is a participating counterparties and accepted counterparty. So that's 74, yeah? Now, the other thing we're keeping an eye out for is the award, which is 0.05, and the amount in billions submitted / accepted. So, where is it? There should be a comment. I can't see it. Normally, PC Tracer posts a comment of the chart down below. I don't know why it's not there. Yeah, I can't see it. Hold on, let me open. Let me try and find an older post that this user may have put, just to show you. Let's see, comments. I don't see it. What? Hold on. Give me a second. Apologies for this. Bear with me. Bear with me. Maybe he did it on here. Who knows? Alright, it's the same post, different subreddit. There it is. There it is. This is the chart we need. Apologies for that. Left-handed wave guy, which is the reverse repo table dude. So you have the date on the left column. You have the amount in billions, parties, and average. If it's a bold arrow going up, current day is greater than the previous day. If it's a hollow arrow going down, current day is lesser than the previous day. If it's a star, it's the largest amount for that column. Okay. So the star's here because it's the most relevant date. The amount is not the largest. It's close, but it's not the largest. The largest was the 30th of June at 991.9 billion. I was at 8.07. Well, a little bit less than 8.07, but you get the picture. 8.07 billion, shy of a trillion. And also the parties was 90 parties, which averaged out 11 billion. You have a significant less amount of parties, 74, and an average of 13 bill. Now, the amount, the last 3 trading days, has significantly rose. The amount of parties has increased by 4. That average has gone up by 300 mil. And there's a high chance we could be seeing a trillion by the end of this week, being realistic. So that's the chart. But the thing was, I'm making this video because of the comment. The comment that was put, those 2 comments that were very useful. Very, very useful. This might not be the answer to on RRP blow up. I was thinking of this, and then a George Gammon video with Stephen Matt Van Meter brought it up and made it click. The main users on reverse repo sorry, what was it? Yeah, Repo. The main users on RRP are money market funds and notably Fidelity SPACs. Well, SPAXX is a government money market fund, and they're required to invest almost all their cash into government debt, such as short-term treasury T-bills. As a government money market fund, this fund is required to invest at least 99.5% of its total assets in cash, US government securities and/or repurchase agreements that are collateralized solely by US government securities or cash, collectively government securities. The money market funds are literally invested in the US debt, nothing else. It's in the Fed's best interest that these government money market funds do not fail. We've seen signs of shortages of T-bills when T-bills yields dipped on the RRP rate of 0.05% multiple times ever since June 17th. This is signaling a high demand for T-bills. So, best guess? Now this person put 4 bullet points. Everyone in the actual market is eating up all the T-bills, possibly for things like securities, financing, transactions, SFTs, which allow people to swap shares for collateral, allowing resets of failure to deliver on stocks. With all the T-bills being eaten up in the market, the money market funds must turn to the Fed because the Feds can supply them T-bills with the Fed's balance sheet. The money market funds are required by law to invest in those T-bills, not wanting the government money market funds to fail since they back the US debt. The Fed raises the RRP limit to $80 billion. On the RRP cannot be equated directly to meme stocks, but it is indirectly shows us how much collateral is slowly being eaten up by the system as entities struggle to find collateral to stay alive. Now, the person followed up, I believe, yes, the same user, followed up with a second post. 1 month T-bill yields dropped from 0.05% to 0.02% on July 20th. There was a huge demand for collateral that day, T+2 from July 16th. Now, July 20th, coincidentally, was the day where cryptocurrencies were also blowing up. So if I showed you a chart of, Bitcoin chart, and we zoom in to July 20th, that was only 8 days ago, you will see Bitcoin going up, and it really hasn't come back to those sort of levels. Let's get it on the chart. So July 20th, you're seeing it around 29k, starting at 30k first thing in the morning, getting lower, 29.5, the lowest you've seen, goes back to 30k. But look at that, 21st, you have that first initial spike to 30.7k, which realistically was only seen about a day ago. Then you see another bigger spike, touches 32k. Trade is somewhat sideways but positively up. Then another spike on the 23rd, goes up to 33k. Then July 25th, from 34k all the way up to 38k. And then another spike, July 26th, to 39k. A big dip to 36k on the 27th, and it's gone up. And now, at this time of recording, Bitcoin is at $40,201. And that is a big increase. A 30% increase. A 30% increase. All the way from down here to up here. And why is that? I don't know. And now we're seeing 1 month yields holding around 0.04%. despite on RRP being 0.05%. Demand on short-term treasuries has been steadily increasing over time. It's currently as bad as the end of Q2 June 30th, when there was a huge strain on the system and loading. We're not even close to the end of Q3 September 30. Things can be really bumpy from here on out. US Treasury needs to cut the more T-bills out the system by July 31st to meet the current debt ceiling. If the debt ceiling isn't increased, T-bill supply will be cut off because the US can't issue more debt. Now, the way it's going, it's telling us that T-bills, there's a high demand for it. A very, very high demand for T-bills. It's getting eaten up. And what's one thing that it's useful for? Hiding failed to deliver. Where is it said? Which allows people to swap shares for collateral, allowing resets of failure to deliver on stocks. Why would failure to deliver be wanted? Why would you want to hide it? Why would you want to reset it? Clearly, there's a lot that you're trying to hide. All we know is GameStop is heavily shorted. Maybe they're trying to cover that. Emphasis on the word maybe because we don't know the facts, do we? Or do we? I'm pretty sure we know the facts. Anyway, that was just something I wanted to bring up to light. And honestly, PC Tracer just coming out with this daily reverse repo update. Consistently, always on time. And then that other user, what's the other user's name? Your left-handed wave. I'm not sure if it's normally that person that does the chart, but if it is, shout out to you as well for doing the table, which is very useful. Very, very useful, going back to June 21st. Now, we still have another 2 more days this week. Thursday and Friday. Do you think it's going to touch $1 trillion by the end of this week? Because I'm pretty sure it probably will. It's not just the end of the week, it's also the end of the month. Plus, it's a Friday too. I'm pretty sure it's going to hit $1 trillion. And that's just going to show the demand for T-bills. Will the US Fed increase the ceiling? Well, the options are very limited, just like for the short hedge funds. Anyway, that's all I want to bring to you.